Hello there, welcome to my YouTube channel. This is Nirav. In this session, I'll be doing Elliott Wave analysis for gold. I'll be looking at possible wave structures, possible patterns, possible long side trading opportunity along with targets and stop losses for the same. Before moving any further in this video, I have a very small announcement to make that I have launched these one-to-one classes which is available under this link called training program on my website. Basically what I'm doing in this class is that we are taking up a chart or whatever the chart you want to discuss, and then we are building up the counts from ground zero, and then we are seeing that which particular count or which particular trading strategy will fit in live market. So basically we'll develop the counts and then the trading strategies and then check which one of them is like going to work out in the live market, or which one should be played out in what scenario in the market. So the only basic requirement I want is that the students getting in like have a basic understanding of the basic concepts of Elliott Wave. So if you have done this video course available on my website, then that's very good. Just directly contact me through my Skype. Even if you have not done the video course but you are sure that you are clear on the basics, you can still contact me on Skype and we'll see if we can work or not. I have already delivered like 10 or more of these classes and the feedback has been very good and the discussions have been meaningful and useful to the students as well. These classes are also running at 33% discount and I have kept the prices very reasonable as well. So that was about that. Let's move to the actual chart. So right now on screen we have the chart of gold, and this is the daily chart, right? So what we are seeing over here is an impulse down and then a correction going to the upward side. Before we move forward with this particular chart, let's have a look at a forecast I made on gold on 10th February 2017. So this forecast, the market was trading somewhere around 1235. So this is more than a year old. The targets were like 1330 and then 1380 or what. Right now the market has achieved like only till 1375 something, so a shy of like 5 points from target 2, which I would say is very good because target 1 is achieved, target 2 it went very near to it. So you can already see the power of Elliott Wave here because it was like a 1 year old analysis. After that I made multiple different analysis videos of the intermediate counts and all that. You can check that on the gold Elliott Wave playlist on my YouTube channel as well. Anyway, so in this session let's move to daily, to 4 and then to 15 minute to see this current price action. So right now here we have this point of reference which is the starting point, and how Elliott Wave progression moves is that we have an impulse and after that we have a correction and this cycle continues on. And if you are not much familiar, an impulse is a 5-wave structure. We have a straight 5 down here for 1, 2, 3, 4, and this is the 5th. I have actually discussed the internal patterns, like 4 was a triangle and 5 was an ending diagonal and all that in my last video that I was referring to. I mean this particular video. So if you are interested in all that, you can check that out. Anyway, so I'll leave a link for that in the description. So that was the impulse complete to the downward side. Once 5 legs are complete, we can consider that as a 1 or an A. After an impulse is complete, then we will see a correction. So if the impulse is in the downward direction, correction will be in the upside direction. So, and if the impulse was in the upside direction, the correction would have been in the downside direction. In this particular case, this was downside, so this correction, as you can already see, is moving to the upside. And a correction is basically 3-wave kind of pattern. It can be ways different ways, but what I think in this particular chart is playing out is a sort of an ABC correction, which is possibly a zigzag or a flat. Now we are not clear on that because I can actually take this as a 1, 2, 3, 4, 5 up, or I can also take that as an ABC up. So I'll just get to the point here that that really doesn't matter, at least as of this point, because right now what we are going to discuss is this wave, and this is what I think is going on right now, that the A is complete over here, then the B is continuing as a flat type of structure. I mean the B is a flat in itself. It could be a triangle as well, but let's just consider the flat possibility first. So if it's a flat, then it will have like 3 waves of itself within it. A flat type of structure is like 3, 3 and 1, 2, 3, 4, 5. that's the kind of structure a flat is. So after this flat is complete, we will again have the C leg up. So that's the main kind I'm going to discuss. And yeah, once again, I have considered the possibility of this being 3, and even if we consider that, things will change, but not for right now. I mean, the context of market right now is like it should go up from my perspective and then have a leg down. And even if you consider the other counts like this one, then also that remains the same. So I'll not consider that count for now to reduce confusion. Maybe I'll discuss in the next video or something. So moving on, so we have this, as I just said, possibly an A, B, C for a flat, or it could also be like A, B, and then C, and then D and E for a triangle. A triangle is like something like this kind of structure: 3 down, 3 up, 3 down, 3 up, and 3 down. So that's a sort of a structure for the triangle. So we already have the WXY, so 3 down is complete over here, and then W, and then an X and a Y, so 3 up will be complete over here for a running triangle because it's going above the starting point. So that would be that, right? But the main theme remains that we are still to see one leg up, and the reason for that is because I think this particular leg, this B wave, is continuing as a double zigzag. Now let's look at that in detail. So okay, let me just discuss a little bit over here, and then I'll move to a chart in which I have a bit of detailed count. So what we have is like ABC, X, ABC over here, and after that we have, after we have this A down complete, we have like A, B, C, and then another X, and then A, B, C. So if you're not much familiar with the double zigzag formation, it's something like this, right? So we have the ABC up, which is this particular move. After that we have connecting wave X, right? This is a 3-leg type of structure. This is the connecting wave X, a 3-leg type of structure, which is a zigzag in this particular case. And in this zigzag we have the A leg down for 5, B up for a triangle, and C down for a 5. So this is the connecting wave X complete. And after that we should have another A up, a B down, and then a C up to new highs most likely. So we have the A up over here, B down is possibly about to complete, and then if this is the B down and if it's about to complete, then we should have a C leg up. So that's the main theme I'm going to discuss in this particular video. So what we are about to do is like find out the possible targets for the completion of this B and the possible targets for the upside movement of this C that will complete this B. Let's move to the detailed chart, and we will move from this point on. See, the ABCX is complete, so W and X are complete. We are moving on to the next zigzag part, this part. So this is the detailed chart. This is the point where the next zigzag part is going on. So this was the A up, and after that we have the B down. So we are basically interested in seeing the possible ending points for this B and then the targets for the C. So A is down complete over here, then we have say what, an A, B, C for this B. Now this B has an A, B, C kind of structure within itself, where the B is a triangle, right? A, B, C, D, E. So if we go to a lower time frame, we can see the ratios as well and all that, but that's not the main theme of this discussion. So let's focus on the C leg down, right? So we have the A leg complete, the B over there complete, and C should get completed very soon as per this count. Now the basic ratios we use are like this Fibonacci trend space extension tool. We will measure the length of wave A, starting from starting point of A to the ending point of A, and projecting it from the starting point of C, right? So the basic ratios we look for are 1:1, which is already achieved, so it's meaningless right now. And the second one we look as 138 and 161. 161 is more important, but right now what it looks like is like it's having some support at 138, so it might just reverse from there. Because if I have to make things clear, these ratios are not a rule, these are just guidelines to look at for possible clues. So we'll just say that this is the important level 161, which I have already marked with this blue line. And before that, a less important level is like 1283, which is 138 level. So let's mark that as well over here. And now the more important thing we'll do is like we'll go to this particular impulse down and see the internal structures of this 1 2 3 4 5 to find out a possible ending point for this wave 5. Now just to make things clear over here, we are in, say, what, the B wave, and this B wave is progressing as a flat type of structure because this is A down, this is B up, and then C down. And if you're not familiar, flat will have like a 3 3 and then 1 2 3 4 5. So first 3 is complete as an A over here, second 3 is complete as an B over here, and the third is a 5 down, right? So it will be going like 1 2 and then a 3 and then a 4 and then a 5. So that's what we have right now on screen. We have like 1 complete over here, 2 also done, 3 is also done, and the 4 is also done. Now this is the 5th leg remaining, right? So within this 5th leg we will again have 5 leg structure in itself. So if I am to, let's say, clarify it, so if I were to magnify this 5th leg, right, because this was the 4th and this is the 5th, so if I were to magnify this 5th wave, we will see something like this in it, and we can then say that this is the 1 of the 5th, 2 of the 5th, 3 of the 5th, 4 of the 5th, and the 5th of the 5th. Once the 5th of the 5th is complete, we will then proceed to have the upside movement, which in this case would be dot C leg to the upside, which as per this particular analysis should make new highs and hence should go above 1365. We will look at the targets for this dot C later on. Let's just first look at the possible completion point for this 5th. So this is the first of the 5th, dot 5, that is. This is the second of the dot 5, third of the dot 5, fourth of the dot 5, and this is the last leg down. Now if we move to, let's move to 15 minute. So if you can see on the 15-minute chart, we have the 1, the 2, and then 1 2 3 4 5 for the 3 down complete, then A, and then A B C D E. Possibly it's a triangle, possibly just a flat structure. I'll have to check that on lower time frame, but anyways I think the 4 is done by here. And then we have possibly 1 2 3 4, maybe 1 leg down is still remaining, or maybe it's complete. So let's just look at the basic targets that we use for the completion of wave 5. So basic targets that we use are like the wave 0 to 3 and then projected from 4. So if we measure the starting point of wave 1 to the ending point of 3 and project that from 4, we will look for like 38.2 and 61.8. So as you can see, it's already at 61.8, a little bit below it. So this is the like main ratio, 61.8. Let's mark that as well. And the second main ratio that we can have a look at is the 1:1 with wave 1. So what we'll do is we'll measure the length of wave 1 and then we'll project it from the starting point of wave 5 and look for like 1:1 and 161. So 1:1 is already achieved, exceeded, it's near 138. Maybe it can go even lower, but I personally think it's like about to get complete, right? So if we mark out the levels, we will have 1:1. It's no need to mark that, it's already achieved. So we'll just mark out the 161 level here. Once again, you'll just have to remember that these are just guidelines for determining possible ending points, not rules at all. So now that we are done with all that, now the thing that is more important remaining over here is that a confirmation. So first thing is that we will just assume that maybe we have more downside remaining. So what is it gonna be like for a trading strategy perspective? Are we going to like buy over here? If you are like using some candlestick formations and reversal patterns, etc., then you can wait for a little bit downside over here and then look for a reversal, right? That can be your thing, like wait for a downside over here, check possible reversals in this region, and then go long. That's one thing you can do. The second thing, or the more simpler thing over here, is like wait for a break above the last 4 high or the resistance high. So this is the last wave 4, which is the wave 4 of this dot 5. So if we see a move above this price level, this can be taken as an upside trigger. I already have the trigger set over here, as you can see. And the next thing we can look is a break above this channel line, which is a 2 to 4 channel line. So if we break above it, this can also be taken as an upside trigger. It depends on you and your trading strategy, your risk management and all that, because if you look for a reversal over here and get long right over here, your stop loss will be like very small. Like for instance, let's say that market goes till here and you somehow see some reversal over here, right? Then your stop loss would be only this much, right? But if you go long over this point, your stop loss will be this much. So it's always a trade-off between confirmation and risk, right? So it depends on your trading style and the methods you use. And obviously I'll just like to point out that this is all for the purpose of education. If you go along and take some trades on gold, that's all up to you. I am not liable for any profit or loss that you make in that, because these videos are basically for educational purposes only. Anyway, so moving forward, that's the plan right now. The most conservative is like wait for a break about 1294 to get long, and if you have your own strategies, you may look for a reversal here, or a break of the channel is also a possibility you can take for longs. Now that we have taken that in our mind, let's go back to 1 hour and see some other price action things, like things important from a price action perspective. Okay, so let's move to 4 hour for much clarity. So we have the like A, B, C, right? And then X, and then we are saying that this is another A, then another B, and then another C should follow. So if you look from a price action perspective, we don't want to see this market go below wave X low. So say for whatever reason this count was incorrect, this 1, 2, 3, 4 down, 5 down was not the proper count, and this market just keeps going down. So if you are a swing kind of trader, you can always keep your stop at this level of what, 1236 something, because that's the price action invalidation level. We don't really want to see a move below wave X. So if you are trading from a swing perspective, that you are going to add some longs here, wait for this, wait for a possible lower levels if the market gives them, and then add more longs for this complete move up, then your stop loss would be like 1235. However, if you are like intraday kind of trader and just don't want to take this much big of risk on gold, because you know the lot size and all that is like it will cost a lot of money if you are just an intraday guy, so you may look for just long trading opportunities as I just discussed over here, and keep the stops below this wave 5 low when the reversal happens. So that's that. So swing traders stop loss is at like 1235 something, below 1235 a little bit, and for intraday we will have to still wait for the confirmation or the completion of this wave 5 of dot 5. Now that was about that, and now let's look at the possible targets for this wave C, which might progress if this count is the correct one. So first of all, we'll just take the 1:1 because that's the most common ratio we use. So we will just check the length of wave 1 starting from starting point of dot A to the end of dot A, and okay, let me do that. Starting from this starting point of dot A, measuring the whole wave dot A and projecting from the possible end of dot B, right? So since we don't have the exact end of dot B, we'll just take a rough assumption. So our 1:1 is coming around at somewhere near 1413, right? So let's just say that it's like 1400 something level, because obviously this wave 5 is not done, so these can have a little bit plus minus and all that. So if this is correct, and if it goes to 1:1, we will have like 1400 as a target. The other target we look for is like 61, which is sort of not much valid because it's not even crossing the last high. It's only going till the till the peak like wave.a peak. So we'll just consider our target level as 1400, right? And the next targets we'll look for like 138 and 161, so that will be like 1464. So let's just say 1460, and if it's for whatever reason going up, then it will be 1495, right? So that's just one way of taking these targets. I'll just like to note down 1400 for once, and then let's look at some more things to clarify possible targets and possible progression for this structure. So the next thing is that I'm assuming, let me move to daily, right? So I'm assuming that this is, say what, an A up, and this is an A, B, C down for possibly a flat or a triangle. So now wave B, if it's a flat, right, basically an expanded flat to be more precise, then this wave B should not go above 138 inverse of wave A, right? So we'll have to check the 138 inverse of wave A, and then we will come up with the 138.2 level of that. For that, I'll just use the Fibonacci tool, standard Fibonacci tool, and then project the inverse of wave A. So the 138 is coming at 1473, right? So basically it means that if this is the count that's being followed, that this is the A down, this is the B up, and this will go down for the C of the flat, or even if it's going down for A, B, C, D, E as a triangle, that would be a running triangle in this particular case, then it should not give a closing on a daily basis above what, 1473. So 1473 is both a target, and above a closing above that will say that this count is less likely or less probable. So once again, we have like previous target was 1400, and the target 2 was, say what, 1460 something, and another important level, or 138 level, would be can be taken as both a target, and a close above this will suggest less probability of this count or a weakening of this particular wave count. So these are the three targets you need to keep in mind. I personally think that it will go if this count is followed, then it should go somewhere near 1470 level and possibly form a reversal over here and then move down. Now that's all a rough analysis. The main thing is that we should first see a reversal, right? And once a reversal is formed, the wave C up, which is this particular wave, will move up, and it will be in 5 legs up because C is an impulse or an ending diagonal. So when it's moving up, we can take the internal ratios of 1 and 3 and then project the targets for wave 5 end. So that would be more precise. But until then, if you want a rough outlook, because if you are going in for a swing or intraday trade, you obviously want a rough idea of the target. So those will be like 1400 levels, 1460 and 1473. So these are the 3 points or 3 important levels you need to keep in mind. And obviously, as this wave progresses, if it progresses as we are thinking, then we can count the internals and take the structures and get these targets again, redo these targets. I'll probably make a video for that as well. And that's about that I wanted to discuss in this video. And yeah, one more thing I like to point out, that this is just one of the hypotheses that I have right now in my mind, and it's possible that there is something else playing out which I could not see for now. And if that's the case, then and if you are going with this particular theory that this particular hypo is playing out, then you'll have to take the loss if it goes below 1235 level, right? So always keep your stop losses in the market. We are not always right, so we have to take the risk, and if the risk is materialized, just go with it and wait for another possible opportunity. So that was about this particular analysis. Let me conclude quickly. So we just said that this is an ABC X ABC double zigzag, and we are also thinking that this dot B is about to get completed in this session or next session most likely. So once this dot B is completed, we will wait for confirmation that the reversal has taken place, and then we can look to add longs. And if we add longs, our possible targets were coming at what, 1400, 1460, and last one was 1473. And the stop losses were for intraday traders would be the end of wave 5. For swing traders, they can go as low as 1235. And keep in mind, these analysis can always go wrong. I am not liable for your profit and loss. Do always read the disclaimer that is presented on the screen. before the video starts. And that's about that. Yeah, one more thing I'll just like to mention quickly is that if you book these 1-to-1 classes that I was discussing before, then there's like 2 months of Slack group. You can also join. This is our private group where I keep updating my accounts and all that on these charts, say what gold and Nifty and natural gas, crude oil, copper and S&P, Nasdaq, etc, etc. There are a lot of things we discuss. We are also covering a bit of stocks as well, and bonds, etc, etc. So I'm quite active on this, and you can also talk to me via personal messages if you are interested in some clarification and all that. That was about that. And if you like the video, hit the like button, share it so that I get more views and more motivation to make such videos, and I hope to see you in the next one. Thank you.